So we all know that credit score is extremely important. Whether you're gonna buy a car, a house, start your own business, or do some investment, if you're ever gonna borrow money in one point of your life, your lender is going to look at your credit score. And having a good credit score will determine whether you're gonna have a good interest rate or not. Having a good interest rate will save you a whole lot of money and opportunity. First foremost, most importantly, figure out what your credit score is. Check your score regularly on a monthly basis or every other month just to see if there's any suspicious activities. If you're someone like me who loses your purse all the time or your wallet, you might want to call one of the 3 major credit bureaus, TransUnion, Equifax, or Experian. Tell them to flag your account for you as an account under risk. It's just for a small amount of fee, but it's definitely worth it. Late payments is very serious, can cost you as much as 100 points, just one single late payment. Payment history accounts for 35% of your total credit score. That's according to Fair Eyesight, the company that calculates your FICO score. A FICO score is a score that's based on 5 criteria. It ranges between 300 to 850. The 5 criteria is number 1, payment history, and that's 35%, very important. Also, amount owed, length of credit history, and new credit, and also types of credit used. Some common mistakes that people make that can really cost you some precious credit score is, first of all, not asking what you want. Just don't accept everything your credit card company offers as something written on a stone. You can't change it. If you want it, tell them to change it. If you don't want that credit line increase, ask them to remove it. Get back to your old ones. If you have one late payment and you've had a squeaky clean record before, ask them to remove that little blemish. Remember, just one little payment, missed payment, can cost you as much as 100 points, and you don't want that. There's a difference between 700 and 600. With a credit score of 700, you can get the best interest rate out there. And if you miss one payment, if you drop your score to 600, you're gonna have a hard time getting a loan or a mortgage, let alone getting a good interest rate. So ask your credit card company very nicely to remove that little blemish from your history. They could say no, but they could very well say yes because they value you as a customer. And trust me, it doesn't hurt to ask. Just ask anyway. Your credit score is going to thank you for that. Number 2 on the list, accepting credit line increase. Being the responsible on-time bill payer that you are, your credit card company rewards you by upping your credit line limit. But you really have to think twice about it before accepting. How much can you afford to reasonably charge? It's not necessarily a bad thing, but if you're unable to meet your new minimum payment, resist the urge to spend more. Last but not least, number 3, consolidating your accounts. So you're considering transferring all your credit card balance into one card, so you're only dealing with one bill every month. Sounds like a good idea, sounds sensible, right? But it's definitely a big no. Remember, just think about it this way. One big balance looks a lot worse than multiple small balances. Appearances are everything. That's some tips for you, and thanks for watching my video. I'll see you next time.